not on the West Coast. Now, in this video, I'm going to be talking about retail and how it is slowing down dramatically. This is something that I have been talking about for quite a few months now. I'm guessing probably about 6 months ago, I did a video talking about retail dying on the vine. And this is something that I am experiencing firsthand from the hardware store that I work at my local yard or local, lumber yard here. And it's something that I have like experienced in the past when we've had like recessionary pressures. I mean, back during the dot-com era, again during the great financial crisis, and just recently during the pandemic. I see a lot of changes that take place within the retail space. I mean, not only just the phone calls that I get, but the amount of traffic that I have coming through, how many people are looking for maybe carpenters to do wood or to do like remodel work, or just to help improve the house in general. How many like sales that I get on a regular basis. I have like a really good firsthand experience and knowledge that takes place within this. And a few months ago, like, about 3 months ago, it was like very, very slow for the retail space. Now, construction wise, it's still doing fairly okay. Not exciting, but not exactly bad, not in my opinion. But the retail, the walk-in customer, that has slowed down dramatically. And it's confirmed in this article that I leave down in the description from Home Depot. Now, Home Depot has acquired a new distribution portion to their business model, and it's this company SRS Distributions, and they are geared more towards the pro kind of aspect of things, so the guys who are actually trying to make money with the purchases, as opposed to maybe a homeowner who's looking to improve their property. So the pro side of things is really geared towards the builder or the construction aspect of things, as opposed to somebody who's like, again, who's just like buying paint to change the color of a room. Now, this article is pretty good, what it says. The Atlanta-based company is making yet another push to gain customers who tackle complex and lucrative construction jobs. This is talking about this SRS company, particularly as homeowners pull back on do-it-yourself projects. Pretty interesting to think about, right? The retailer, a major beneficiary of the pandemic trends, has dealt with a moderating sales as customers take on fewer home projects and spend more on grocery bills and experiences. Again, this is something that I have witnessed firsthand. The article goes on to say this: over the past few quarters, customers have bought fewer big-ticket items and have tackled smaller, less pricey projects. Again, this is something that I have been reporting on for, at least 6 months now, talking about how the retail space is slowing down dramatically. And a lot of people wanted to like disagree with my observations on what's happening out here in the economy, and saying that, hey man, you're way off in the middle of nowhere. You ought to come down to, my particular area. Things are just rocking and rolling and booming. Well, this is Home Depot like saying this. This isn't me, some little guy out in the middle of nowhere talking from a local lumber yard. This is a major distributor of building supplies across the country, right? And they're talking about the major slowdown that has taken place within the retail space, and now they are moving into a different model in order to acquire the pro business, right? And this is something that I was not anticipating, but definitely was alarmed about when I saw how fast that things were slowing down, considering, the sales conditions that I'm experiencing personally. Now, I've talked to a few of the other people who have worked in the yard, and these guys, I mean, we've been in this game for 20 plus years, right? And talking to some of them, was like, have you ever remember it being this slow? And all of them shake their heads no, not since the great financial crisis, when things slowed down dramatically. And even then, it didn't feel as slow as it is right now for the retail side of things. Not from the building side, but just the retail side, the walk-in customers. And all of us are feeling it the same way. And I could only assume that as long as the narrative stays out there that the Federal Reserve is going to keep interest rates elevated for a significant amount of time, I can only assume that this retail space is probably going to end up being very slow. Now, something that I had considered, why is it that there was so much more retail like years ago than there is today? Like, the building seems to be doing okay, but the retail space has died off, and I'm really believing that has to do with the rolling over of your old houses into new houses. Not necessarily like an old dated house to a new built house, but just going from, a smaller house or to a bigger house, like climbing the property ladder. Most of the time when I talk to people who have purchased a house or are moving into a different home, from like, I know me personally, when we moved, we just took all our old furniture and everything and then set it up. But my parents would buy some new things for the house, but it wasn't like a major bunch of purchases. Now, I have talked to a lot of people who completely furnish, completely deck out this new location, not even like a different location, upgrading to all new stuff. Now, I imagine how much retail is actually taking place when people are leaving one house and going to another, say just flipping their homes. And so inside of that, I know that me personally experienced from the lumberyard aspect of things, when people are moving into a new house, they change everything about it. Even if it's a brand new constructed home, a lot of times they'll change the color of the walls. They'll change like maybe the landscaping of it. There's a lot of things that will begin to be different about that brand new home that, typically you wouldn't think of being spent on. Like, you wouldn't imagine somebody buying a brand new home and then coming down to get paint for that brand new home, but that does happen. And so when you think about like people moving from one house to another, how much retail actually takes place from that move, right? Just people like just trying to upgrade their homes. Well, less homes are being sold. Less people are moving. They're staying put because of the high interest rates. They have a low interest rate on their mortgage. They're not necessarily moving out of that house into another one. And so they have already set their house to the way that they want it. There is no need to come down to the lumberyard to buy new paint or to buy new fixtures or to change it around any. It's already the condition in which that you want it. So I can assume that as long as the sales of homes stays low, then I would assume that the retail space would also stay low as well, because it just makes sense for the way that it's going. All right. Just wanted to bring that one up there, share it with you guys. Let's go and see what you all are talking about. All right, Putz. Hey, y'all, went to my local feed and seed store around 4 p.m. yesterday. I was the first transaction of the day, that is. Wow. Yeah, it's pretty slow. Like even I myself, like when I come into work first thing in the morning, typically what you're going to hear is phone calls asking like when deliveries are going to arrive or when maybe particular items like we have special order are going to arrive to us. And so that would be like a typical like morning phone calls that you would get. And right now, like I think we got our first phone call, like we open up at 7:30. I think we got our first phone call around 8 looking for price and availability of an item that we had in the yard. It wasn't asking about delivery or anything else like that. There was a couple of other calls that came in that were talking about deliveries, but it wasn't like a major flood of people like, hey man, getting ready for the day. We need some items. We need to know how much price is. Can you get deliveries? Like all these like business questions that you would normally get a flood of first thing in the morning, especially when things are busy. We're just not experiencing that right now. And so, yeah, it's pretty slow on the retail side. All right, thanks for taking the time to stream this morning, Simon. Thank you very much, Brody, for being here. Neighbor's plumbing business is down to 4 employees from, I think, 10. They have no planned work either. Yeah, and that's something else that I'm starting to hear a little bit more of. I know a framer, a guy who just basically, puts the framing up of a house, does the framing, the sheathing, the windows, the doors, the siding. I don't think he necessarily does roofing, but he does pretty much everything else. And he was saying, man, if you hear of anybody who needs any work done, like I'm free. I don't have anything going on for, until the middle of the summer or something. So for months now, he actually said this to me a couple of months ago, and it's still the case for him. He says he's picking up a few jobs here and there, but it's like nothing steady for him at all, which is something that he hadn't experienced for many years. He said that he was never had a downtime, for the last few years. And this is new to him. All right, all-nighter, like button has been smoked, making great progress today. Gonna keep at it. Bring the ear candy. Right on, all-nighter. Yeah, if you guys want to see somebody who's really doing progress on a house and pretty much taking on the idea of becoming somebody who's investing into real estate, follow Noel Nider's channel. I mean, he's doing a great job. He's up to 160 subscribers now, posting, I believe, daily, if not multiple times a day. So good stuff. All right. Let's go. Okay, Elizabeth says great increase in prices coming after Baltimore bridge collapse. Yeah, Elizabeth, I don't know. I mean, I think about that. It's going to be pretty disruptive, especially for a lot of particular industries that were really reliant on that particular um, distribution network going through there. But I am just going to be under the impression that they will reroute it. They will figure out another way. If this type of thing was happening on a broad scale, like it hit multiple locations, I mean, like you lost the ability from that port. You lost, say, same thing happened to the Columbia River. Same thing happened to, a couple of other locations around. Then it would be very concerning, in my opinion. This, although is going to be incredibly impactful, I don't think it's going to be such a dramatic impact to the economy that the Federal Reserve would actually be adjusting monetary policy because of it. Like, not pandemic size kind of event. Although, like I said, although it's going to be huge and it's going to be, you can probably come up with all kinds of ideas and theories and stuff like that to how it's going to impact the economy. But again, like, how is it that the Federal Reserve may change their monetary policy because of it? I think that's going to be a very low consequence to it. Personally, salute and respect to the uneducated and the chat. Well, thank you, Long Beach Joe Jets, man. I appreciate that. All right, self-education. Hey, Simon, an all-nighter. Right on. Glad you're here. Dishes says, good morning, guys. Hit the like button. All right, Nick, less do-it-yourself projects because fewer people have discretionary income. Well, yeah, and also, like, you think about it, a lot of people who are planning on flipping their home, right? They're doing forced appreciation, so they're putting in nicer stuff, fixing things up, making it look better, upgrading, doing whatever it is that they need to do. But if you're not planning on doing that, then a lot of times, why would you spend that money? Like, you're anticipating on getting that money back. It's like an investment. But if you don't plan on flipping that house or you don't plan on selling it, and you're just going to hunker down, why would you want to change anything about it, right? You just kind of live with the way it is. And then if it ever came time to sell, that's when you start moving back into working on the home again and upgrading it. All right. Hi, self-education. Hey, Slacky. Hey, dishes. All right. It's Lavish Patch Kid. Wouldn't the high interest rates on home loans dictated a slowdown in the retail of building materials? Well, I mean, I would say from the retail side of things, but if you think about the high interest rates would typically go into the construction, like you would think the construction part of things would slow down. And that, although is slow in a lot of ways, that it has slowed down, but you think the home builders are doing quite well. The like Weyerhaeuser, lumber producers, they're doing fairly okay in a lot of ways. It's in like here when I think about like interest rates being elevated, that would slow down like the new construction part of things. People borrowing money to build a home, right? When people are upgrading their homes, yes, they would borrow money to do it, but then would be less money needed in order to like upgrade the home on a kind of like piecing it together slowly. Like you paint this room, maybe next month you'll paint the next room, or maybe do some exterior siding on one side of the house, and then next year do the other side of the house. You see what I'm like, kind of like delay those particular projects so it isn't like all at once. When you're doing construction, a new construction, it's all at once. Like everything has to happen right now. And so most of the time, people aren't like piecing together a house, meaning that you wouldn't have to borrow money to do it. Most people have to borrow money in order to build a home, unless you're just doing it straight up out of cash. So again, like higher interest rates to me would be more impactful to the new home construction market than it would be to the retail space, as the retail space would probably use less credit to do that. To like putting it on a credit card as opposed to, just paying cash for it. I mean, I guess that's probably from the things that I've seen personally from, working the retail space on that. All right. Shall a man make gods unto himself, and there are no gods? Okay. 368 people watching. My gosh, go hit that like button, everybody. I'm going to be out here for probably at least another 15, 20 minutes or so. All right. My mom had an HOA at her house before she died. Wonderful house and a top area view, etc. But I immediately sold it. I went and lived there. I knew the HOA nightmare, homeowners association, for those who don't know, there for years. Yeah, and they kind of can, dictate how it is that you can live, how your house can look. There's a lot of rules to an HOA. I just spent $730 yesterday on 2 pairs of boots. Retail is booming. Nah. What kind of boots? I buy Danner, Acadia boots, best boots, and about $100. Yeah. They were designer boots. They nickel and dime you day after day, month after month. $400 pair of boots is insane. Talking cowboy boots. Getting into the boots, man. Thorough good, union made in the USA. Yeah, I mean, even me personally, I think about like some of the, like I just recently did my taxes, and it was pretty cool. Oregon had a pretty decent kicker check to it, so I ended up not having to pay out as much in taxes as I thought I was going to, which was pretty cool. So I know here in Oregon, a lot of people ended up with like a kicker check, and I heard a lot of people talking about it too. So I don't know if that like increased some of the retail, some of the retail economy here in Oregon or so, but I can only imagine that being very short-lived, as it was just a few $1,000s, a piece for everybody, which I know can be very, can be quite dramatic for a lot of people as far as like making a huge difference in their lives. But for the most part, $1,000 really isn't that much money, and over the course of a matter of a few months, people will nickel and dime a lot of that $1,000, or even if it was $2,000, it really doesn't matter. They'll probably end up, spending that off on just little items here and there. It's really when I think about it from a different aspect, like if it's continuously being injected into the system, right? Month after month, we're getting, another check coming in. That's really what starts having a major impact to the economy. Otherwise, it's just kind of like a flash in the pan. Like it'll do something really quick, everybody notices, but then it quickly dissipates, and then it's all over again. It's that continuous increasing or continuous pushing of new stimulus into the system that would really have the major impact to the economy. Just a one-time shot, although it would be very dramatic and a lot of people would talk about it and the narrative would be very big on it, the actual lasting impacts to the economy, I think, would be quite minimal. All right. Moving on. All right. With sub 300 HOA maybe. Okay. There was a bunch of noise about rate cuts coming this year. Last month, I'm no longer hearing people talk about it much. Yeah. And now, what did I say? Like back, when they first made this statement back at the end of the last year, right? At the end of the year, the beginning of this year, everybody was convinced about the rate cuts coming. Like everybody. I was one of the few people going, no, they weren't. They didn't say anything about doing rate cuts. It's a plot map, right? It's like a forward projection of where they think that things should be according to the conditions that they're in today. It can change. Like once we get there, the conditions are not going to be the same. And so it's best to understand that that is just a rough idea on where it is that they feel that things there should be considering the current conditions. Remember, conditions always change. They never stay the same. And so once we get there, we're going to find out that, oh, hey, you know what? Inflation didn't come down. Things aren't like, quite in the same position that we thought that they were headed towards. We're not going to be able to cut rates. And now, I mean, whether that happens or not, that's a very likely story that's going to end up taking place, as most people are like so stuck on what's coming from the mainstream media as opposed to what's actually being said from the Federal Reserve. This is why I follow these speeches. Like this speech right here, I have so many copies of it. Monetary Policy for a Low Neutral Interest Rate World. This is probably one of the most telling speeches that I have ever seen come out of the Federal Reserve. And I am so glad I came across it because the Federal Reserve doesn't really talk that much about their monetary policy in such a straightforward way like this speech does. Right? I mean, you think about it, like everybody seems to think, oh, the Federal Reserve is reactionary to these current market conditions. No, they're not. Right? They are not reactionary towards it at all. In fact, if you go back and you listen to some of the things that they were saying, that, where is he? Talking about, and I repeat this all the time, so, if you're new to my channel, then this is cool, but if you're not new to my channel, this is something you've heard me say a million times. Today, we face an altogether different set of problems stemming from a very low neutral interest rate. That is, the short-term real interest rate consistent with an economy operating at its potential alongside low and stable inflation. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. Think about that. The problem that they needed to solve was inflation expectation that was persistently too low rather than too high. Now it's high, and a lot of people say it's too high. That's what they wanted. The problem they needed to solve was an inflation expectation that was too low rather than too high. Now with it too high, perfect. That's the problem they needed to solve. They don't need to solve that problem anymore because we all have inflation expectation that is too high, right? And that's what they wanted. And as far as too high, that's only from our opinion, not the Federal Reserve's opinion. They got it just right. Here's another one, right? The downward shift in inflation expectation has a second round effect on real interest rates, the economy, and inflation. When policy is constrained by the effective lower bound, this is really important to understand because monetary policy came to an end a few years ago when they hit the lower bound to zero, meaning they can no longer stimulate the economy with the dropping of interest rates. Typically, the Fed would want to lower interest rates to get people out there borrowing money to go out there and spend it into the economy, houses, cars, and vacations, right? When policy is constrained by the effective lower bound, the downward shift in inflation expectation raises the real interest rates, further diminishing the degree of monetary stimulus, making the downturn worse and in reducing inflation even more. So here, think about that. When policy is constrained by the effective lower bound, the downward shift in inflation expectations. The downward shift in inflation expectation raises the real interest rates, further diminishing the degree of monetary stimulus. So as they're trying to hit us with stimulus, they need to increase the inflation expectation, right? Otherwise, if the inflation expectation was if the inflation expectation was too low, then it further diminishes the degree of monetary stimulus and making the downturn worse. Even when times of policy is not constrained, the expectation of below target inflation, like when everybody says, man, there's no inflation, the Fed should be printing money back in 2018-19 coming from Donald Trump, even when times when policy is not constrained, the expectation of below target inflation in the future affects current decisions. See, this is the point about it. It affects current decision making, putting additional downward pressure on inflation. So if people don't expect inflation coming into the future, they conduct themselves in a way that doesn't allow inflation to actually take place. It pushes down on inflation expectations, which actually drags inflation down. It's like inflation is a self-fulfilling prophecy. If you believe that there's going to be more, then you're going to conduct yourself in a way that actually causes inflation to happen, so long as we expect it. If we don't expect it, then it won't happen. In other words, monetary policy is always swimming upstream, fighting a current of too low inflation expectation that interferes with achieving the target inflation rate. See, the Federal Reserve knew it way back in the day that the inflation expectation being persistently too low and running into the lower bound of zero meant that they were done. Out of the game. No longer going to be a central bank operating system because they ran out of monetary policy. They knew it was coming. They knew it was coming from 20 years earlier. Ben Bernanke was talking about it in his speech, deflation and how to prevent it from ever taking place here in the United States. And a major tool that he was talking about within that speech was quantitative easing, asset purchases. And when he talked about those is as the tools to prevent deflation. Like if a deflation scenario was ever hitting the United States, you go into asset purchases like quantitative easing. This is what we are experiencing right now. Everything that the Federal Reserve has attempted to do over the last few years was solve a deflationary nightmare, and it totally worked. Everybody thinks that they screwed up and failed and all that other stuff. No, man. According to this speech right here, given back in November of 2018, they positioned this economy, the monetary policy, into exactly what they wanted with a higher inflation expectation, and we all have it. Even now, with the like, even the statements coming out from the mainstream media was like, "Oh, sticky inflation. I don't know what to do about it." Right? Perfectly in line with the Fed's policy. Totally need that. If they didn't have that inflation expectation coming out of the mainstream media like they do, they would be failing. But they're not failing. They're totally successful at what they're doing right now. It's painful. And I know a lot of people would look at the Federal Reserve and say, man, they're this evil organization causing all this, chaos and horribleness amongst the people out there. The people have positioned themselves incorrectly. Right? They were convinced that cash is trash, that the New World Order was going to abandon the dollar, that the BRICS nations were going to rise and come up with their own gold currency and all this other stuff. No, I don't think so. All right, go and read this one right here, right? Dollar funding stresses coming from China, out of China. This thing was written back in November 1st of 2022, so it's just not even 2 years old, a year and a half old, right? Read this thing. They talk about all the dollar-denominated debt that exists in the world and whether or not the Federal Reserve could even print at a pace that is fast enough to cover all that debt, right? People don't know this. They don't know it. They don't look into it. They've never heard of the milkshake theory. They never heard of the euro dollar. They don't have any idea who Jeff Snyder or Brent Johnson is. Right? I mean, these two guys talk about this stuff extensively, man. They talk about it in a way that, like, I've never heard anybody else really even consider, Man, we got a lot of people watching. 556 people. Hey, go hit that like button. We got 150 people watching, or 150 likes right now. With 550 people watching, we should have that up to at least 300 likes right now. All right. If you don't have money now, you are out of luck. Time to tighten the purse strings. Yeah. All right, I'm going to cruise down here to the bottom and go check out some of these current. All right, Bitcoin could go to zero one day, but it sure made a lot of people money. It could go to zero, but in my opinion, it's not a matter of its trade to the dollar. Right? I mean, what if it was worth $100 million? What does that matter, right? I mean, the dollar could be worthless, right? Doesn't make any difference. How many transactions are actually being done in Bitcoin? How many actual transactions, like not size of them, what they're purchasing, just how many are actually taking place? Because that's the important part. Regardless of how much it's worth, how much transactions are they actually doing? And that's really where I feel that Bitcoin serves its purpose. It's a means of doing transactions. It's not a place that you store value, right? That's not where it's meant to go. So what it's worth is inconsequential to how many transactions it can do, right? That's the more important part, and at least in my opinion on it. Gave a like. Always love your content. Well, thank you so much. Don't break the yoke, please. I love the name, man. All right, I hit the like button. Thank you guys for hitting that like button. The algorithm loves it when we have a bunch of likes when I go to upload the video. It get more people to join in on this. David's, that is good to know. What are we talking? Who's David's? Okay. Yes, most of mine is 10K, 14K because you could pick it up cheap. Are you guys talking about gold? All right, Simon, read the worldly philosophers. Maybe. All right, gold refining. All right, let me cruise back up here a little bit. Dollars aren't money, though, is the thing. Dollars are debt notes. Yeah, they are debt notes, and I do agree with, that they're not any kind of store of value. But they do provide one thing, and that is, well, actually two things. One, they do transactions, right? So you can trade with somebody else pretty much freely with anybody in the entire world, right? Everybody is just about, everybody will accept dollars. So it does that. And the other thing it does is it pays off debt. And now that's something to really think about, right? Because a lot of us are in debt. And when we're in debt, like to mortgages or credit cards or car loans or something like that, there's one thing that everybody really needs in order to pay that off. Right? You need dollars. And so they're not worthless to that. They do pay off debt. And when you think about it, if you have an easier time acquiring more dollars to pay off that debt. That's a good thing. When inflation inflates your debt away, so you don't have to work as hard to pay it off. So I do understand where a lot of people are coming from as far as saying, hey man, I want to, devalue my debt in a way by devaluing the dollar. Like that's like something that you could really, conceptualize going over time. However, saving in dollars is very difficult when you have an inflationary scenario, as your purchasing power ends up just leaving every single day. You're watching it deteriorate. So now what do? Like, what kind of position do you really want to take? Do you go massively into debt and hope that you can, pay this stuff off with cheaper dollars coming into the future? Or do you invest in a way that, allows for a strengthening dollar to increase your holdings by having higher interest rates and return on like money markets and stuff like that, the return on capital investment? Which one is better for you? I mean, who knows, right? I mean, it's the position in which that you have taken. Now, I personally look at the idea of having sound money, having a savings account, having a return on capital investment. To me, that's a good economy. Like a good strong economy is built off production and savings. You work real hard, you produce a lot, you do a lot of good services, you work damn hard to produce something that is really quality and useful out there. And then you save it, right? Then you save it. That's like, how hard is this of a concept, right? The only problem is that the idea of saving that money gets deteriorated when you have an inflationary scenario. So now you can't save it in that fashion. You have to invest it in something and hopefully get a return on that investment. Again, it's all about the position that you have taken on whether or not that's a good or bad thing. To me, like, I don't look at inflation or deflation or interest rates or anything as a good or bad thing. It's just the way it is, and you have to conduct yourself in a way that is most appropriate for the conditions that we are in. Everything is collapsing, but the stock market doesn't seem to care. When it will crash hard. Are you into Bitcoin? I'm into Bitcoin. I mean, I try to buy Bitcoin every month. I try to buy at least $50 once a month. If I could do it once a week, that would be awesome. It doesn't happen too often like that. I did try to invest a dollar cost average for an entire year, and it was difficult. I did $50 a week into Bitcoin and $50 a week into the stock market. And it was a lot harder than I thought, to come up with that $100 a week in order to, to contribute to these things. I'm so glad I did. I mean, the contributions, what I've put towards it has dramatically increased, right? It was a great deal. It worked out really well for me. It gave me a lot of confidence into continuing to purchase Bitcoin and stocks as well. But, dollar cost averaging is the only way that I can really do it successfully. Anytime I've ever tried to time the market, I've failed at it. I am not a good market timer. I just rather dollar cost average in and hold it, All right. The dollar is a store of value because of the federal government taxes it out of existence, which means less dollars to purchase goods and services. Then the government spends to get the economy going. Yeah, I could see where that cycle kind of goes into it. Yeah. All right. Any thoughts on cannabis rescheduling to a class 3? Listen, I come from Oregon, right? In Oregon, weed was never illegal. I don't know if a lot of people knew that, but it was never a crime. It was a misdemeanor if you had a possession of marijuana less than an ounce and it wasn't like packaged for distribution, if you weren't manufacturing, if you weren't driving, if you were just simple possession of less of an ounce of weed or less, you got like a $600 misdemeanor ticket and you went away. You just went on your way. Right? There was you didn't go to jail, you don't get arrested, you didn't, like, your whole life didn't come undone, none of that stuff took place, right? It was like, it's almost comical when it's not funny, but it's kind of funny to hear, like, people like, man, he got arrested and served 10 years in jail because of a joint that he had in an ashtray because of a roach or something. I'm like, whoa! Wow. Yeah, no, that doesn't happen where I'm from. They just literally don't care. Don't care, never have. So, weed was never really important here. Everybody, like, a lot of people do it. Like, it's very prevalent here in the Pacific Northwest, and especially in Oregon. And it was never a big deal. Like nobody really concerned themselves that much with it. Like, I mean, I guess like the younger crowd or, maybe people who were like dealing black market or something like that. Like it might have been important to them making some revenue or something of that nature. But it was never that important. It's just a weed. Like it literally is just a weed. You throw it out there in the yard or whatever, it grows and that's it. There's nothing to it. And so there's no value. Like literally, weed has zero value to it whatsoever. The only thing it can ever do is get you high. Now, if you look at it from like the CBD aspect of it, right, then there is some powerful medicine that is involved within the marijuana cannabis, product itself. But for the most part, people aren't using it for medicine. They're using it to get high, right? And there's no value in any of that stuff at all. Now, I think about it like here in Oregon, when they legalized it, the first year was really profitable as the people who were moving into it finally had a product that they could sell legally. Okay. So the first year or two was probably pretty profitable for a lot of people. After that, it was a flood of, it was like a sea of green, right? Everybody has it. Bud is like almost has no value to it whatsoever. I see signs out front of the dispensaries that say $49 ounces to it. Like I remember paying some kid $50 to get a chump eighth of weed when I was younger, and we were happy with that. Now you can pick up an entire ounce for $50. It's just like it's like nobody cares anymore about it. And so I think about it, it was just like, really, what kind of value does weed bring? None. If you can take some seeds, take a plant, put it out there, it grows. Yeah, it probably takes some skill to grow good quality weed or to grow an abundance of it, but it doesn't take any kind of real special talents to grow weed. Like anybody could really do it, right? If you're a brewer, like you're brewing beer or something, there's some people out there who really, really know how to brew good beer. Like it's good stuff, and people would pay top dollar for it. You could go to that brewer, right, that guy, and say, hey man, how do you brew beer, right? Tell me step by step exactly how you do it. And he could give you in detail every little micro step all the way through the process of brewing beer, and you could follow those steps exactly the way he described them, and I guarantee you your beer will not taste like his. It might be good, but it's not going to be like his beer. The brewer himself is the one who makes that beer taste good, and it's a craft that is skilled and unique to each individual person. Now, granted, again, there are people out there who could probably grow pretty good weed, but it's not the same as like that brewer who is brewing that good beer. Anybody could grow weed. You can grow an abundance of it. It doesn't have any real value to it. It doesn't really do anything. And ultimately, I would never invest into any kind of cannabis stock, ever. Not with what I know about weed and what I grew up with. All right. Cannabis market will be the new prohibition boom. Good investment opportunity. I doubt it. Maybe in the first initial years that the states that are legalizing it, I think you have a great opportunity to make some profit in those states when it's becoming legal for the first time, like the first year or two. I think you've got a great opportunity inside of that. But after that, there's like, believe me, man, like look around, all the weed that's growing here in Oregon doesn't have any value. Like it has to be the absolute highest quality weed in order for it to have any kind of value as in bud form. Other than that, they're making concentrates, making edibles, making other products out of it, and in that sense there might be some profit that can be made in there, but even still those products, the price of them has completely collapsed. It's almost worthless. Like it has no value. And it's pretty much always been that way, except for when it was illegal and you had to pay some kid for chump bag. All right, what time is it? All right, guys, I'm going to give it like another minute here. Let's read one more question, something that doesn't talk about weed. All right. Blame the booming condo market, less space for new stuff and renovations. As more people move into condos, expect retail to continue to decline. Yeah, that makes a lot of sense. Thank you for the comment, Rudy. That does. Lots of people rushed into growing pot in 2021 and 22 in Cali, but it's oversaturated now. Not a lot of demand now, too. All right. What will lumber do this summer? This is it, guys. When it comes to the home builders, like the sentiment has turned positive, but it's not completely. Like, look at the buyer traffic sentiment. Like, the builders' buyer traffic sentiment is still incredibly negative. When that moves positive, I don't know where lumber is going to go, but it's going to dramatically move as the builders are going to get very confident inside of the buyer, like that the buyers are going to be there and they're going to ramp up production. The people anticipating that there's going to be this housing market crash. I still see articles, I still see people talking about it, and I don't get it. Like, I mean, the interest rates are elevated, the mortgage rates have been elevated for quite some time, the cash buyers are coming in a dramatic fashion. The idea that there's going to be this flood of homes coming from foreclosures, it still could be possible. I ain't seen it yet. And even if that was the case, it would take a long time for that to actually ramp up to bring new inventory to the market. You think about it, like if you lose your job and you can't make your payment and you're in the same condition as a lot of other people out there, when it comes to foreclosing on that house, there is a process to it, and if there is a flood of foreclosures taking place, that process gets extended out even further. So the idea that these houses are going to come onto the market in like from foreclosures and be at a reasonable price, like they're not trying to sell this house out to keep from losing out on it. If they're losing the house and they are like completely walking away from it and the bank has taken possession of it and they're going to put it up for auction, that takes a very long time to get out there. And if you have the Federal Reserve like promising, right, that they're going to be lowering interest rates going into the future, that actually starts driving down the mortgage market, like the interest rates in the mortgages. Just the idea of it happening, like any kind of like expected promises. And anytime you ever see that happening, you're going to see people moving into purchasing homes again. It's something that took place at the end of last year. Everybody was convinced of it, and it's actually created a little bit of, like, I wouldn't say a boom, but a bunch of like activity within the home purchasing and in the mortgage creation. So I would assume, like, this summer, if you see the home builder sentiment moving up, you're going to see lumber prices move as well. And the closer it gets to it, the more I'll report on it. Like today, we saw lumber futures prices drop dramatically. Like, I mean, it was at like 620 or something last week, 610. And right now we're at like 585. So there was a fairly decent drop in lumber futures price, but still at, 600 per thousand, that's way above what the typical 400 to 500 per thousand would have been pre-pandemic. So, but still not nearly the 1,700 per thousand. Alrighty, guys, thank you all for being here. I can't believe how many people we have watching right now. 600 people. That is so amazing. We got 276 likes going on right now. If you go and hit that like button, we get it up to 300 people. That would be so awesome. 300 likes before I end this stream, which is going to happen here in about 2 minutes. Do you think people will find it harder to pay their debt in the upcoming near future? Yes, I do. Blah, 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 whatever, B-L-E-H, blah. Yes, I do, because I really feel as the Federal Reserve continues to go into their quantitative tightening, which is pulling money out of the system, we are eventually going to find ourselves at a tipping point where there's plenty of liquidity to all of a sudden there's not enough, right? And the moment that there's not enough liquidity in the market and you start finding things becoming very illiquid, meaning that you just don't have easy access to sell them, that's where you're going to find a lot of people are going, oh crap, I can't come up with the money. Like my business is slowing down. I can't find a job. I can't find the extra work. The assets that I have are not, not of good value because people are selling those things off to try and acquire the dollars that they need to pay off their debts. Like, a liquidity crisis can be very difficult to operate through, and nobody knows exactly where to go to, right? Because if the dollars are harder to get a hold of, everything begins to crash. Where do you put your money in order to feel safe? Like, do you get into cash and hoard the cash? If that's the case, then you're not spending that into the economy. That's why there's the liquidity issues happening. So the idea that there's plenty of money around and that there's plenty of access to money and that the idea that you can sell something very quickly, that's like good liquidity times. When you go into liquidity crunch is when none of that is happening. Like, you don't have access to sell this product like right away. And people aren't paying top dollar for it. Everybody's hoarding onto cash or trying to get a hold of it. They're like, you start seeing things like really odd happening, like the dollar and gold moving up at the same time because everybody's looking for a safe place to be. It can be quite dangerous, for those who are heavily indebted, because you just simply can't come up with the funds that you need in order to pay your debts off. And then you start seeing the rise of defaults and bankruptcies, which we are already starting to experience. I mean, the liquidity crunch is coming. Like, it's already getting tight out there, and the Treasury is preparing for, like, the bond market itself becoming illiquid. They will be there to buy their own bonds back to make sure that the market stays liquid. Just the idea of them being there to do that is the credible threat and ought to bring in the market participants. So they may not even have to do that much of their own bond buybacks, the Treasury itself, but doing just a little bit would bring the confidence of the market participants to be there to make sure that the market stays liquid. Very, very interesting times coming. I don't know if I explained that correctly for everybody, but if you've been following the channel, you've heard me talk about this one before. Thank you, everybody, for hitting that like button. We have so many people watching right now. This is quite incredible. 622. Thank you so much for joining this live stream. Uneducated Economist, you guys let me know.